Loud. Right. Let's make sure this is recording. Awesome. All right, cool. Hey, everybody. Appreciate you guys tuning in for another segment of the SimpMe Weekly webinar. Appreciate everyone that is watching live. I appreciate everybody that will be watching the recording, and we'll be making sure that this is actually posted on YouTube. It got a lot of positive reception last week, so I'm excited to do that again. For those that attended last week and also watched the recording, we switched up the format where we'll be walking through a newsletter today, a newsletter that we published earlier this week on our Sent Me Says newsletter. So I got a couple examples that I'm going to walk through on the newsletter. Well, with the newsletter, and then I'm going to essentially walk through some examples that I think are going to be very interesting, very informative. So let's get right into it. So for those that are interested, if you go to sentme.substack.com or if you go to www.sentme.com, you can subscribe to the Sent Me newsletter. It's called Sent Me Says, and we publish a weekly newsletter most times, sometimes every 2 weeks, but we are pretty consistent. We have a lot of content there. So if you want to subscribe to the newsletter, we post a bunch of really great information there right to your email. We won't spam you. So definitely sign up for the Sent Me newsletter so you can stay updated. But I want to walk through the article that we posted earlier this week that I wrote. So without further ado, the title of this newsletter was Your Time is Finite and the Denominator Isn't. Now, what does this mean, right? Sometimes I think about how strange our financial system actually is. Every day we exchange something incredibly scarce for money, our time. I only have so many hours in my life, and so do you. Our energy is finite. Our ability to work is finite. The amount of value we can personally produce during our lifetime is finite. Yet we exchange that finite resource for something that operates under completely different rules: dollars. And if you're watching from another country, maybe you get paid in euro, maybe you get paid in the yen, etc. But I live in America and we'll go with dollars for now. The supply of dollars or any currency and dollar denominated credit expands. Banks can create credit, governments can run deficits, central banks can expand their balance sheets. The financial system can create additional claims on wealth without creating additional hours in your life. So that distinction has fundamentally changed the way that I personally think about investing. So, for instance, we talk a lot about investing in the stock market. Sometimes we talk about brokerage accounts. Your brokerage balance isn't the same as your wealth. Most of us are trained to measure financial progress in dollars. So maybe you have $100,000 saved. Maybe you have $10,000 saved. Maybe you have $500,000 saved. Some people may have $5 million saved. It all varies, right? Some people may have $5,000 saved. All we know is that it took you time to save that amount of money in your bank account, in your investment account, your 401k, etc. We watch that number increase and we assume that we're becoming wealthier. That's what we're taught. You're taught to go to work, you're taught to save in your bank account, you're taught to invest in a brokerage account, and you just see the number go up on the screen. But there's another question that's worth asking. What can those dollars actually buy? So suppose your portfolio increases from $500,000 to $1 million over a long period of time. That's obviously better than remaining at the $500,000. But did your actual wealth double? We know the nominal value, the number went from 500,000 to 1 million in this example. But did your actual wealth in terms of things that you can buy actually double? That depends on what happened to the purchasing power of the dollar, of the yen, of the euro, whichever currency you live in. That's what determines how much purchasing power, that you have during that same period. So if houses, food, energy, healthcare, education, and other scarce things also became dramatically more expensive, the increase in your brokerage account doesn't tell the entire story. The numerator, like your personal numerator, is increasing, right? To go back to the example, you could have 500,000 in your bank account or in your investment account, you could have 100,000, you may have 10,000. And the number may go up in gains, you may get some gains. But Even though that numerator increased, your personal numerator, what happened to the denominator, right? Stocks are different from dollars. This doesn't mean that stocks are worthless. Quite the opposite. When you own a stock, you own a claim on what should be and hopefully is a productive enterprise. Great businesses may own factories, intellectual property, networks, equipment, data centers, brands, and other productive assets. They may employ people, generate goods and services that society values. That's why equities traditionally have historically been such an important wealth building tool for certain demographics, for certain people, people who may be exposed to some of this stuff earlier. It all depends on your background and kind of what you see, but it doesn't mean that you can't learn about it, right? That's what we're about here at SimpMe. But we still measure the value of these stocks, of these assets, primarily in dollars because you may live in America. So a stock moving from $100 to $200 doesn't necessarily mean the underlying economic value doubled. Some of that increase can come from genuine growth and productivity, and some can reflect changes in the value of the currency itself. This is why I increasingly want to measure wealth against things that are difficult to produce. So, how much housing can my portfolio buy? How much land, how much energy, like gas, how much gold, how much Bitcoin, how much of another person's labor. Maybe you're hiring somebody. These questions tell me something a dollar balance alone cannot. Why? It's because your labor cannot be printed. This is the part that I keep coming back to personally in my journey. Imagine spending 40 hours a week working this week, right? Those 40 hours are gone forever. You exchange a piece of your finite life for compensation. You know, you got to go to work, you got to have a job. But that makes preserving the purchasing power of those earnings incredibly important. Because if I exchange scarce time, like all of our time is scarce, for money, and then simply hold a monetary unit whose supply can continually expand, like the denominator of dollars that exist, I'm exposing yesterday's labor, my labor, to dilution. I'll repeat that. Because I exchange scarce time for money or currency, and then simply hold a monetary unit of dollars whose supply expands the denominator, I'm exposing yesterday's labor to dilution. That's why investing isn't just about making money to me anymore. It's about converting today's finite labor into money, into assets capable of preserving a claim on tomorrow's finite resources. That could include productive businesses. For some, it may include real estate, depending on if you have oceanfront, beachfront property and maybe Miami, may be a lot more scarce than a property where the supply is increasing more rapidly, the denominator is increasing. But you can't really just increase oceanfront property in Miami because it's very scarce. The denominator matters. It could include gold, which is money. It could include Bitcoin, which is money. Different assets, different monies have different risk characteristics and purposes. The point isn't that every asset denominated in dollars is bad. The point is that the dollar shouldn't necessarily be the only measuring stick. The denominator matters. We've been conditioned to ask, how many dollars am I worth? I think there's a better question that everybody should ask that's watching this video is how much purchasing power have I preserved? Because ultimately, wealth isn't the number sitting on the screen. Wealth is what the number allows you to command in the real world. Your time is scarce. Your energy is scarce. That's why I love Bitcoin. That's why I think gold is awesome, is because it allows you to protect your scarce time and you're trading your time and your dollars for hard money. Land is scarce. Energy is scarce. Real resources are scarce, not the paper denominated thing, not the paper that's printed. The monetary claims competing for those resources can expand. And once you understand that distinction, investing starts to look very different. I repeat, once you understand the distinction that I'm trying to lay out for y'all right now, investing starts to look very different. The reason why I think this is so important is because oftentimes people will come to me and they want to try to make money quickly. But typically when I tell them, I'm like, hey, what we do at SimpMe, we're breaking this stuff down to understand freedom literacy. Freedom literacy is different than financial literacy. Freedom literacy makes you sovereign. Financial literacy makes you subservient in a box. And that's why this is very important to understand the difference between money, the difference between currency, and how you protect your finite time. when you change your measuring stick to things that can't be printed. You stop thinking exclusively about accumulating more units of currency. Like I said, I'm not telling anybody to not go to work and get their dollars and get their job. I'm just telling you to change the denominator, to think hard about how much time it spends for you to work for whatever your salary is, your hourly rate is, and then how easy it is to go spend that on something stupid. You're like, okay, I'm gonna go get this money and I'm gonna go spend hundreds of dollars maybe on sneakers that you may not be able to afford, but you know how hard you had to trade your time for that thing that's printed? You want to think very deeply about that. You want to also think about how you can protect your purchasing power. So for me, for y'all, hopefully you start thinking about preserving the economic value of the finite time that you exchange to earn those units in the first place. Your time is finite, the denominator isn't, and that's why the denominator matters. So, this whole newsletter and what I wrote and shared earlier this week, I hope you guys got something out of it. Like I said, you can go to simpme.com and subscribe to the SimpMe Says newsletter. It's on Substack. We literally publish content all the time. But I really wanted to walk through that because every single week, we talk about a lot of this stuff. We talk about why the denominator matters through some of the slide decks and information I've shared with you all. So I felt like it was very important to bring this back home. So with that, I have some other examples that I want to walk through as to why this is very important. So this is the United States debt clock. You can literally check it out on your own. You can go to the usdebtclock.org, usdebtclock.org. And as you can see, the US national debt has reached a record high of $40 trillion. Now, mind you, this deficit has expanded over the years. And it's important to understand that the past couple of years, it's expanded by trillions of dollars, like $2 or $3 trillion. With the Iran war, the amount of money that's being printed is outrageous. And this is why I always tell people that the denominator matters. You're getting paid in this denominator of dollars that's constantly expanding. You can see the numbers on the screen literally moving right now. So this is very important. In addition, you can look like if you're understanding why the deficit even is relevant, imagine you have a credit card and you essentially are just running up the credit card. And then instead of paying off the balance of your credit card, you're going to get another credit card. And then you're getting another credit card and running that balance up. And essentially, you're making whatever money from your job. You're not really making the payments, but your balance on the credit card is just growing into perpetuity forever. That's literally what I'm showing y'all right now by the US national debt. And this impacts you because you get paid in dollars. This is the reason why I always say that the denominator matters is because oftentimes people are thinking more so based off of the dollars, the nominal value of what they see, but they don't understand or maybe they haven't been exposed to the idea of the denominator of currency that exists and why that's relevant in your life. So this is why I break it down this way, and this is why it's very important to take this stuff into consideration. Because if you don't, you will end up kind of wandering aimlessly through this thing called life, not knowing why your dollars aren't buying more things. Now, with that being said, there's really, really large budget items that you have to take into consideration when it comes to the United States budget. As you can see, the Medicare and Medicaid is the largest item at about 1.9 trillion. Social Security is 1.6 trillion. This is annually, by the way. The defense and war is almost at about a trillion, and the interest on the debt is over 1 trillion. So this essentially means that the interest is higher than the defense budget, and it's literally almost as high as the Social Security entitlements that have to be paid out. And this isn't slowing down. Like I showed y'all, the US national debt is increasing, and we get paid in dollars. You may get paid in euros, it still impacts you. You may get, because there's a deficit for y'all. You may get paid in yen, there's a deficit for y'all too. So it's important to understand this. One thing that's also even kind of crazy is the off balance sheet liabilities that exist. The off balance sheet liabilities, they don't even show that here, is in like the quadrillions, which is a ridiculous number. So I really wanted to break this down for y'all and show you when I say the denominator matters, this is what I mean. This is what I mean when I say the denominator matters, especially when you get paid in dollars, like we all do. Now, my next example, this is a great website that my man Nolan, that's actually on the show right now on the Zoom. He brought this to my attention some time back, and the website is called WTF Happened in 1971. So, does anybody know what happened in 1971? If you do, feel free to drop something in the comments. Maybe you've heard about it. Maybe you watched a YouTube video. And I'm gonna break down a little bit of what happened in 1971 and why this is important.
The dollar divorced from the gold
So
standard.
feel free to drop that in the comment box if y'all are interested. Or somebody can come off mute if you want to come off mute and explain it.
Can you hear me? Jordan, can you hear me?
All right. Well, I'll explain it really quickly. So in 1971, what happened? Let me see. Hold on. Is there something wrong? Oh, yeah, this is weird. It seems like I can't hear you guys
Can you,
speaking.
can
That's
you hear
weird.
me,
Hold on
Jordan?
for one moment. Like, y'all can hear me. Interesting. That's weird. Maybe it's something wrong with my volume. Hold on for 1 second.
Can you hear me, whoever's speaking?
Can you hear me now? I
Nolan, I can't hear you. It just sounds like Jordan can't hear you.
And
okay.
I and I can hear you
Hold
as
on for one
well.
second, guys. I'm
All
gonna
right, yeah,
grab my
cool.
headphones.
I just want to make
Yeah,
sure I was tripping.
yeah. So it's definitely on Jordan's side. He just can't hear
All right,
us.
perfect.
All right, let's see if this works. Can you guys hear me?
Yeah, we can hear you. Can you hear me?
All right, now I can hear Nolan. All right,
All
we're
right,
back. I
perfect,
don't know.
perfect.
Perfect. We're good. Technical difficulties. All right, Nolan.
Yeah, no, we divorced from the gold standard in 1971 thanks to Richard Nixon, and that fully flushed us into the modern fiat Ponzi that we're in today. August 15th, 1971. So yeah, that's what did it.
And for those Nolan who may not know, who was Richard Nixon?
The sitting president at the time.
Okay, got you. Appreciate that. So what Nolan is explaining is very, very historical moment in history that oftentimes a lot of people have never even heard about. He's describing what he explained is in 1971 was when the United States went off the gold standard. There's a variety of reasons why that happened, but the thing that you need to understand is that prior to that, um, every single dollar was backed by a specific amount of gold. So I think at the time, like 1 ounce of gold, excuse me, was backed by like 33 bucks. And that was like the value. So for every 1 ounce of gold, you would be able to exchange it for $33. Once the gold standard was eliminated by Richard Nixon, as Nolan mentioned, that changed the whole game. That essentially meant that the denominator of dollars that existed, which always could be manipulated and printed, it wasn't like they weren't printing dollars at the time and there wasn't a deficit and the debt wasn't growing. It's just the fact that there had to be a certain amount of golds that was in the vaults in Fort Knox, you know? So just to give a little bit of historical context, there's a really interesting book that everybody should check out that's called The Creature from Jekyll Island. And it talks about the history of the Federal Reserve. But one of the examples that it mentions, it talks about in Europe, and this is like probably one of the earliest instances of a bank before a bank was really a thing. And what happened is in Europe, there were goldsmiths. And what a goldsmith's world was an individual in a town, in a city, wherever it was, like in London, they could essentially have gold, but they didn't want to hold the gold. Like they didn't want to hold a bunch of gold in their house. Maybe they didn't have relationships with people who could hold gold in like vaults or something like that. Like they may not have been as wealthy, so they didn't have access to go get their gold stored in a vault with security and stuff like that. Wasn't as readily available. What goldsmiths' role were in the towns is that the goldsmiths would hold the gold. And what the goldsmiths would do is you would go and I'd say Jordan Perry, I'm living in London at the time in like 1800s in Europe. And I would go and I would have gold and I would say, okay, hey, goldsmith, let's say Nolan's my goldsmith in London. Can you hold on to my gold? And Nolan would give me paper receipts receipts, currency that I could use, sounds similar, that I could use throughout the town to go maybe pay Anthony for some steak. Or maybe I could go talk to Sean or Sydney and say, hey, like, you guys have a service that I want to use. Maybe I could buy some fruit from them. And as a result, instead of me having to walk around with a bunch of gold coins, the goldsmith was giving me paper receipts. But the thing is that the goldsmiths, they realized that they could charge interest and that they could lend the gold out. And they did that for a while without the depositors, the people who were giving them their gold. They didn't know. They had no idea that they were doing that. So eventually it got to the point where there ended up being goldsmiths that lost everybody's gold, lost it. They probably just really stole it or they did something stupid. But at the end of the day, there were more paper receipts circulating in these areas as opposed to the gold that was supposed to be backing it. And as Anthony mentioned in the comics, yeah, the exact conversion back in 1971 was $35 per ounce of gold. So the reason why that's very important is because this historical context with goldsmiths and them lending out gold is what essentially led to modern day banks, which led to fractional reserve banking and the idea that you could essentially create more dollars out of nothing that weren't backed by anything. And in 1971, that's when the United States went off the gold standard by Richard Nixon. So that's why I wanted to kind of lay out that historical context. So if you go to WTFhappened in 1971.com, you can read more about this. So as you can see from this example, this chart, it's a little bit small, but it shows that this red line right here is the end of the gold standard. And the US consumer price, the CPI, from the CPI, which I like to call it the CP lie. It doesn't really tell you the full story. Look at that like vertical increase. From 1971, the inflation went vertical almost. That's pretty crazy. And you can see what happened in 2008, how it's literally going more vertically up. Like literally the slope is just like going up. It's not even veering off anymore. So absolutely, Anthony dropped another comment in the chat about Bretton Woods system. Literally, the Bretton Woods. If you want to go read up on the historical context and everything that led to the gold standard even being implemented, check that out. Post World War Bretton Woods system. So with that being said, you can also see here that electricity, food, and fruit, based off the St. Louis Fed data from July 1971, same deal here, this arrow. All of these things are going up, like literally. The slope is crazy. It's just ridiculous. So that's a really interesting website that y'all should check out. WTF happened in 1971, and it goes right back to what I always say, why the denominator matters. This is literally going to just continue to get worse. And it's important for you to be able to protect yourself and understand why. So with that, I gotta show love to my guy Sean, who is a hard money hustler. We do a podcast. Me, Sean, Nolan, Rashad, and our friend Jami. We do a podcast all the time. Usually we drop an episode. We try to drop an episode every week. Sometimes maybe it's bi-weekly. But Sean is the founder and creator of a really incredible website called Get Denominated. Y'all should check it out. GetDenominated.com. And he has incredible examples, taking the whole idea of the denominator matters to a really cool level where you can see interfaces. You can literally look at real life examples. And one of the examples that he posted on his website, which is phenomenal, is how much is a median US house in Bitcoin. We're using that as an example. Now, the example here is based off of certain assumptions that you can play around with if you sign up, if you want to run a scenario. But this is the example that I'm going with right now. The local currency is USD. The time horizon is 10 years. Let's say the purchase type is you're buying a one-time house. And let's say the inflation on average, to be conservative, is 3.5% per year, right? This is basically what they say, 2 to 3%. And we know that's not true. We know it's higher than that, right? And Sean's assumption here, or this assumption that I'm using for the example, excuse me, is that Bitcoin's growth rate annually per year would be 15%. Let's say hypothetically for the sake of this example. So how much is a median US house in Bitcoin? A home, as we know, can be more expensive in dollars while costing less in something like Bitcoin or even gold. This example turns a familiar housing price into a purchasing power comparison that you can adjust. So This live Bitcoin rate is actually based off the example of the current Bitcoin price right now, which is at above like 80,000 or something like that, I think, per one coin. So today, as you can see, the price of a home, median price home in America would be 5.1 Bitcoin at $80,000 per Bitcoin. However, in the future, using those assumptions, the price of a home would be 581,000. You see that the price went up in dollars over the years, but it's falling denominated in Bitcoin. If Bitcoin was to go to $324,000. So the takeaway here from this example is that it's more expensive to buy a home in USD, but it's 61.5% cheaper in Bitcoin terms. So today, the median US house costs 5.1 Bitcoin. And if the item rises to 581,000, meaning the home, and Bitcoin reaches $324,000 just about, the same house, excuse me, is going to cost 1.7 Bitcoin. Now, this isn't like random that we're making it up. I have discussions with friends. I share this type of stuff all the time. You could go back and look at the price of a home in the United States before. And I'm going to actually pull that up for an example for y'all real quick. So let's say the median price of a home denominated in dollars and Bitcoin from, let's say, 2012 to 2026. Let's go back in a historical context because what Sean did with get denominated is amazing. It's showing you a future perspective. But what I want to pull up here is a little example. I wish I had the chart, but I don't have it right now. So we're going to do this on the fly, right? So I just plugged this into AI, into Gemini, and it tells me that the median US, oh,
My fault. Check out inflationchart.com. They have a really fire graphic, and I think it's going to show the same thing.
inflationchart.com. Oh, this one right here?
Yep.
Boom. Oh, word, word, word. Oh, okay, okay.
So then you can
Inflation.
price. Yeah, you can price what.
Oh,
Yeah. They took a different.
yes. Okay, okay, there we go. This is good. This is good. Okay, so let's do it. Let's see. Let me see how to do this real quick. Select an indicator. Oh, okay, boom. All right. Oh, this is awesome. Okay,
And
cool.
houses, everything, and you know what I'm saying, and priced in
Yeah, so priced in Bitcoin. This is even better. All right, great example. So Nolan just sent me a website called inflationchart.com. And what we're gonna do in real time is we're gonna price what the price of a home. We're gonna show it in chart format. The house, this is the indicator. The house denominated in dollars because we live in America was super high. You can see that the house price in America over time in the United States is the blue line is going up, goes up, goes up, goes up, goes up, goes up, goes up, right? But look at the price denominated in Bitcoin over time, over a logarithmic scale too. Well, sorry, that's not the logarithmic scale. This is showing you what the price is denominated in the US. Let me go right back real quick. My bad. Messed that up. Here we go. Whoops. Hold on, y'all. Start over. Sorry, I'm messing this up.
I was there. Did he just hit the tab?
Yeah, here we go. Hit that. There we go. And there we go. Cool. My bad, y'all. So as you could see from what Nolan was showing on this website and pulling this up, is that the price of the home denominated in Bitcoin in the red is literally dropping and then it's flat. This is all mathematically proven. And this is an incredible website. Like I literally have heard of this website, so I'm glad he brought that up. And you could literally do this for any indicator. Now,
They got gold too. If you want to look at gold real quick,
they got gold. Let's do gold. Let's do gold. Gold. Same deal, right? So in the last, let's say, yeah, 10 years, I guess that's fine. So same deal as Nolan's mentioning, excuse me. Let's get rid of this. So as we uncheck the price here, you can see that the house priced in gold, same deal is the gold is the house priced in gold is the red line, and then the home priced in dollars is the green line, and it's going up. Now gold is obviously had a recent bull run. And gold is different than Bitcoin, but it's still a hard money. The point is that it takes less gold over time to buy a home, and it takes way less Bitcoin to buy a home over time too. So this is just a very good website that y'all should definitely check out. And shout outs to Nolan for bringing this up. Um, I think this stuff is very helpful. I think these visuals are very helpful. And even back to the example that I was trying to show y'all too, which is way a little bit messier than what Nolan was showing. But this is a output from Gemini. You could plug it into ChatGPT, Claude, etc. And you could see that the median price of a US home, it grew roughly from $238,000 in 2012 to over $410,000 in 2026. So literally the cost of a home, US median price home measured in Bitcoin, dropped drastically from over 50,000 Bitcoin to about 4 Bitcoin. This is all kind of even aligned with what Sean had on his website, Get Denominated, and you can see this drop off. You could see in 2012 it went from like 50,000 because Bitcoin was trading under $10. And over time, the house denominated in the hard asset like gold or Bitcoin is dropping. So this is why the denominator matters. So this doesn't mean like don't go to work and make dollars. Like you make dollars and you can go choose to save in hard money. If you want to be able to buy more things, save in hard money. So mathematically, we're showing you these examples. This is only going to become more persistent and I think become more glaringly available, um, prevalent and relevant. However, if you don't understand this stuff, you won't understand why things are getting more expensive, especially if you're just saving in a dollar denominated account, or God forbid somebody doesn't, they're putting their money in just a traditional savings. Inflation and the real buying power of your dollars is just melting like an ice cube. So those are really good examples that I wanted to show you guys. I did the same thing on Sean's website as it pertains to college tuition. So you could run different scenarios. I think this is a really, really good one too, where you look at the college tuition. And as we all know, some people may be watching, maybe you've gone to college, maybe you have kids in college. It's expensive to send your kids to school. So, the cost of college education is going to continue to drop denominated in hard money. It's going to drop because the dollars are going to continue to be printed and the hard money is more finite and scarce. And the last example here was a wedding. Same deal. I'm literally planning to get married now. It's actually kind of interesting. Me and my fiance are getting married. And just for the sake of example, because I think it's relevant, like we're getting married out the country. We happen to be getting married in Canada. And the interesting thing about it is Canada's currency is the Canadian dollar, and we get paid in the United States dollar. So I think why it's relevant, I'm going to show you guys just an interesting perspective as to why the denominator matters, is that one US dollar gets you about 1.39 Canadian dollars. So what does that mean? This is showing you that every dollar that you have in US, if you get paid in American dollars and you go to Canada, you can actually buy more things because you get paid in a stronger currency. That's why the denominator matters. So because we're getting married in Canada, ironically enough, my fiance was born in Canada, from Canada. It just happens that we're able to like, get our dollars are buying us more things as we're getting the venue and doing different things. And that's a very real world example that I'm seeing in real time planning for a wedding. And I think a lot of people, when you just get paid in your currency, you don't think about how this stuff matters. You don't think about why the denominator matters. The opposite would be the case if somebody came from Canada with their Canadian dollars and was trying to buy things in America. It's going to be more expensive for them because their currency is weaker. So when you think about it from the standpoint of the Canadian dollar and the US dollar, imagine how much more stuff you can buy with a harder money like Bitcoin or gold or something like that. That's why the denominator, it really does matter. And that's why it's just very important to understand these things, because at the end of the day, a lot of people, they don't really think about it. So I will show you an example, like with Bitcoin. Like, literally one Bitcoin is exchanged for 111,000 Canadian dollars right now. It's about 80,000 US dollars. But you could go to Canada with some Bitcoin and you can buy more things. You can buy more with the Bitcoin than you can with the US dollars. So why wouldn't you save in the harder monies? That's really what I'm trying to get through to people, is that the denominator matters. Um, Sean dropped an example right here where he says in the comment box that he's been using denominator with clients and friends to prove that student loan debt and Bitcoin, to show that instead of trying to knock out that debt ASAP, stack hard money ASAP, and pay the minimum, throughout time, the debt becomes cheaper. Spot on. Literally, I always tell people the same thing. I show them, I'm like, hey, whatever debt you have, it doesn't mean you don't, like, it's different with student debt than maybe a credit card debt now. Like credit card debts, the interest rate is way higher. This isn't financial advice now either. I'm not giving you financial advice. This is freedom advice. So it's different. So I can't be liable for it. But either way, it's mathematically proven. You're saving in harder money. When you start denominating your life, your time, your energy in gold, maybe you don't like Bitcoin. To each his own. You may realize one day that Bitcoin's cool and you can dollar cost average, but maybe you like gold. If you buy gold coins, that's going to give you more buying power over time than saving in dollars. As Sean's mentioning, he's showing his individuals, friends, clients, family members, how when you save in harder monies over time, and maybe you're knocking off that debt by making minimum payments, you're saving in the harder assets so you can have more buying power. Over time, the gold, the Bitcoin, whatever the hard thing you're accumulating is, you're going to have more of that and the debt's going to be a smaller thing. And if you ever want to sell some of the harder money to go wipe out the debt, you can. Versus the opposite is saving in dollars, but your dollars are buying less and less over time. It's very, very mathematically clear and glaring from these examples here. You know, it's just very, very interesting. So, like I said, I understand that when it comes to car loans, we talk about that weekly. We talk about the debt cycle. It's crazy. Those are types of things like having a car loan that may be too expensive. That's different where you want to get rid of that. Or having credit card debt, get rid of that. But it still doesn't mean you can't save in gold or Bitcoin or other hard assets while you pay off the debt. But I like these examples that y'all are mentioning because it's super relevant. And I usually tell people this stuff too. So those were the main examples that I wanted to walk through here with these different scenarios is why the denominator matters. Just to bring it back home, like I said, we started off by walking through the how your time is finite and why the denominator isn't when you think in dollars. And we walked through all these different examples using get denominated. We walked through the examples on the US national debt and then WTF happened in 1971 to really make this stuff hit home. But I think it's very important for, to understand this. We continually hammer this home, whether it's the webinars, whether it's some of our Hard Money Hustler episodes that we share to our audiences and to the people. And it's very important to understand this stuff. So like I said, you know, personal finance, as my boy Sean mentions, is personal finance. It's always unique to your own experiences. But when it comes to math, it's undeniable. So keep this stuff in mind. Do your own research. This isn't financial advice, but really, really do your own research because I think over time, as you go back in history and you read about this stuff, you'll realize like, dang, how come I wasn't taught this? Like learning about budgeting and investing is one thing. Like a lot of people don't get exposed to that, but it gets even crazier when it comes to understanding the history of money and monetary policy and currency versus money, real money. For those that may be interested, there's really, really dope videos that I'm gonna share with y'all. There's one that's called Money Masters on YouTube. Check that out. It's like 3.5 hours long. That video is so good. Hidden Secrets of Money is one of the best videos as well. Documentaries on YouTube as well. Money Masters, Hidden Secrets of Money is another incredible video because like I said, like I study monetary history. And I think when you understand that, like you can really appreciate you can't truly appreciate the solutions until you understand the problem. If you don't understand the problem, you're just gonna keep thinking like, why is this more expensive? Like you just kind of go about your day and you're just gonna kind of keep running in place versus when you understand the problem, you can appreciate the solutions and a lot of what we're talking about. So check out those documentaries that I dropped in the chat. The Creature of Jekyll Island is another really good book in terms of like the history of the Federal Reserve and why it's relevant. I can't say enough great things about that book. And there's just other books too, like Broken Money is another really good book by Lynn Alden. Uh, and yeah, like I said, I mean, you really want to study this stuff. This is really about the long-term play. And one of my friends is Paris. If you're watching this or if you're gonna watch it later, bro, shout outs to you. You guys should check out Paris Amato on YouTube, Instagram, and on Twitter. And I'll drop his information in the show notes. But Paris made a really dope video yesterday, and he was talking about how when it comes to like hard money for him, a lot of people look at the price denominated in dollars and everybody, there's like this hysteria. And just think about like if you never even knew the dollar price of anything, right? You would think about your time, your energy, what you're saving in. When somebody was buying New York real estate, maybe back in the 40s, they were investing and they were buying something that was more scarce. They were saying, hey, listen, like New York real estate, Manhattan real estate, one day people may want to live in Manhattan. Maybe now they have a property, a very big building or something in New York that nobody else can really take from them, and that's in their family. It's even crazier when you think about hard money, when you think about gold, when you think about Bitcoin, and the people that understand this stuff, they may save in hard money. They get that. Now, the price is the least exciting thing when it comes to hard money. I get excited to go to work and do things and exchange my time and energy helping people and then saving it in hard monies because this is something that actually is legacy building. This is something that your family, your grandchildren, your children will benefit from. And I think if you can lower your time preference and not think about, oh my gosh, the price is crazy, like that's an opportunity to go accumulate more when it's lower. It's literally the fixed denominator assets. These things, they're monies, like it can't be printed. So at the end of the day, my boy Paris, he made a great video where he was breaking that down, where he's like, I wake up every day charged up because I'm like, this is for my legacy. Think like that, right? Like you're gonna benefit from it, obviously, because you're saving harder monies. You understand how to save, budget. Maybe you have some stocks, maybe you got some Bitcoin, whatever it is. Like personal finance is personal finance. But think about the people after you that don't have to start from negative or zero. Like you can make really great decisions now that can have a huge impact on the future of those around you. And you never know who may need to rely on you, right? Like I said, you can lead people and show people certain things, and maybe they don't get it, but maybe one day you actually can be a blessing to somebody and pay for their dinner, or maybe help them with school, or help a family member with a bill or something like that, all because you understand this stuff. So that's what it's about each one teach one, bringing other people along, but don't get caught up in any assets price in the short term. Think about the future. And shout outs to Paris for bringing that to my attention because I think his video was super insightful and very relevant to the stuff that we share at Sent Me and what we're all about. So with that, I'll open up the floor to any questions that anybody may have. Feel free to drop them in the chat. I think we're about 10 minutes, we got about 10 minutes left. So if anybody has any questions, any comments about what I shared, like feel free. I've been talking a lot, so but I appreciate you guys like participating, sharing websites, resources. So Eric says price prediction for 2030 for Bitcoin in the debt. Let's see. Honestly, let's go ask ChatGPT. I mean not ChatGPT, Google. So based on the current, let's see, the current debt, let's say US deficit and the growth rate of the debt, what would it be in 2030? Let's see. I can't type. Let's see. It's a good question, Eric. Let's see here. Uh, Projections for 2030. So the debt to GDP, federal debt held by the public will climb to about 108% of GDP by 2030, exceeding the previous record of 106% in 1946, allegedly. Total dollar amount, economic analysts estimate that at the average annual growth rate, the total national debt could approach or exceed 48 trillion by 2030, which is kind of crazy because we're at 40 trillion right now. So that's really, really bad. Uh, I don't even know, Eric, what the price of Bitcoin will be. I think that at the end of the day, we saw that Bitcoin ran up to like $126,000, like literally like a year or so ago. So I think honestly, who knows? It may blow past it. I just think that every day that Bitcoin is like under 100,000 is an opportunity for you to accumulate more. And I think at the rate at which the Bitcoin price, for instance, right, like has gone up the past couple days, because of, if you go back and watch last week's video, I talked about the macro breakdown with the treasuries and what's going on right now in that whole ecosystem. For those that may be interested, the Treasury Secretary Scott Bessent, they essentially came on board and said, we're gonna be buying back debt. We're gonna be, essentially manipulating the debt yields in the short term to try to get the debt down, print money to essentially buy back the long-term debt to drive down the yields in the short term. And the US 10-year treasury yield is what dictates how much you pay for your car note, student loans, credit cards, etc. So that's why it's very relevant to you. And the bond market is alarmed, right? The 30 years, how much interest institutions will lend to each other. But the bond market is the source of truth in a debt-based system. I always tell people that. People look at the stock market and they're like, oh, the stock market's up. But change the denominator. Go check out Get Denominated. Go literally plug this into the inflation website that Nolan mentioned. Like once you change the denominator, you start seeing stuff differently. So at the end of the day, what I'm trying to show y'all here is that even over the past 6 months, Bitcoin's up like 22%. The past month alone, Bitcoin's up 27%. And the past 5 days is up 3.48%. So if you're kind of thinking, Eric, based off your question, once they really start printing money, which they haven't done yet, even though the deficit is growing, like we don't even know how high. I think the price of gold and Bitcoin is gonna melt people's faces. And I just think that now is an opportunity to just keep doing your thing, live below your means, keep accumulating. Doesn't mean don't have fun, but always think about how much time am I spending working for these dollars? And, is it worth me just going to buy extra things that I may not need? If I can go save in some Bitcoin or go buy a couple gold coins and keep accumulating, you're going to set yourself up pretty well. So anything below $100,000 is a super steal. And a lot of people still don't see that. And this is your opportunity. This is your asymmetric upside and opportunity to solidify your baseline. And I don't know. I think the price of hard money is always cheap because literally I'm trading my time, I'm trading my dollars for hard money. Like literally, like as Sean mentioned, Bitcoin and gold and stuff has already outperformed every high yield savings account in the short term, 8x in less than a month. If you think about it, when you go to a high yield savings account, nothing against a high yield savings account, but it's just mathematically proven, they'll give you like 3% right now, 4% maybe if you're lucky. But literally, like Bitcoin is outperforming that in a month. Gold is up too over the past like month or so, especially based off of all this news with the treasury and like what they're doing. I mean, you could look at gold in the past, like year to date, gold is up 7%. Past year, it's up 34%. But it's interesting because if you look at it in the past month, it's up 12%, right? Past 5 days, 1.12%. Bitcoin's smacking gold right now, 27%. So I honestly think that you're pretty well off to just accumulate hard money and just kind of let time do its thing. So Eric asked another question. He says, what would be your 30-second elevator pitch to someone who asks, why do you keep saying the denominator matters? 30-second elevator pitch. I would say the denominator matters. Why would I say the denominator matters? I would say the denominator matters because your time and energy is scarce and you deserve to be able to buy more things and to protect your legacy and your family. So for me, I value my time. I know people that value their time too, but unfortunately fall victim to lifestyle creep or maybe have make a lot of money. Like I say, it doesn't matter how many dollars you make. It's about what you do with the money that you save in and what you invest in. A lot of people can make a lot of money in dollars, but they spend it all. They get caught up in lifestyle creep. They're trying to keep up with the Joneses. Once you change the denominator, you could live and do whatever you want. Some people, what happens with the lifestyle creep is they overextend themselves. They literally are looking at the nominal value of the dollars going up and they're thinking, oh, I'm chilling. How come I can't afford things still? I want to send my kids to school, but now it costs $64,000 a year for undergrad. When you denominate it in hard money, you can go send your kids to school. Anybody that's been saving in Bitcoin since like 2012 or 2011 or 2021, they have more buying power to be able to go send their kid to school eventually. So for me, that's my 30-second elevator pitch. Math over emotions. I don't even get caught up in the emotional aspect. I'm like, listen, either you want to do your own research and trust the math. Don't do trust anything I'm saying. Go verify what I'm talking about. And you can go look at the charts. You can rewatch this video 1,000 times and you're owning literally, as Sean's mentioning, 121 millionth. Or maybe you own half a Bitcoin, or maybe you own a tenth of a Bitcoin of the entire network. So no matter what the price is, I could wake up tomorrow and whatever Bitcoin I have is what Bitcoin I have. But the denominator of the dollars, it's changing literally right now. I don't even know what it was when we started this conversation, but it's going up. Like y'all can see it going up right now in real time. I don't own any percentage of this network. My value and time is getting diluted. So, as Sean mentioned, yeah, you're owning a percentage, you're owning a piece of the network forever. When you own some gold coins, they can't take your gold coins from you. So, that's your gold coin and you're saving in hard money. That's why the denominator matters. Um, and another question from Eric. He says, "Does your fiance, congrats, thank you, appreciate it, feel the same way about money, or is it one of those things that it doesn't matter to you?" Yo, honestly, I would, to be real with you, my fiance was the first person when she was my girlfriend when we were in college that ever explained and put me on the hard money and Bitcoin specifically. I didn't buy Bitcoin then, so it's kind of crazy, but she actually learned about it and started sharing information with me. At the time, I think I was almost I was about a senior in college, and I studied finance for those that don't know, and I got my MBA. So I knew what I knew. I was like, I don't really know about this thing. It seems like a Ponzi scheme. Meanwhile, yeah, that's another story. Meanwhile, everything else in the world we live in, the financial system, they just create money out of thin air. So that's kind of more of a Ponzi scheme. That's actually a Ponzi scheme. But that's for next week's session. But the interesting thing is that she was the one that exposed me to that and was one of the first people that mentioned Bitcoin to me. And she was like, "Hey, Jordan, this is really interesting. Like, you can send money to people without having to go through a government and peer to peer." And I was like, "That sounds weird. That seems too good to be true. Like, I don't know what that is. I didn't learn about that." And it's funny. So, to answer your question, my fiance is very much into this stuff as much as me because she understands it and she kind of put me on. One of my other best friends and a couple of my really good friends from college were in Bitcoin since we were in college, and they're chilling and they were in the gold, and I didn't. They kept telling me I didn't really get it the same way they got it then. I get it now. I've understood this for a while now, for some years, and I'm trying to share this with y'all. So at the end of the day, it's really wild. Like I said, um, yeah, Anthony, 1894, Bretton Woods. I'm telling you, Anthony's dropping some knowledge right now. Read up on 1894, read up on Bretton Woods. Read up on that. So yeah, but now Eric, to your point, like I don't know. It goes with anything, whether it's like relationships, whether it's friends. Surround yourself with good people. Surround yourself with people that uplift you. And honestly, the person that you decide to spend your life with it literally will make or break you. So take that very seriously. I'm very fortunate and blessed that we're partners in this whole life journey and we do this stuff together. So, like I said, be right, do right by the people around you, do right by your partner. If you have a girlfriend, if you have a wife or whatever, find that person that you can build with and grow with because it makes the journey that much more sweet. So, great question. Um, so with that, I appreciate you guys. It's 9 o'clock. I want to be respectful of everybody's time. I appreciate everybody for participating. We'll be back next week with another one. And this recording will go out to y'all, and it's also going to go out on YouTube because this was legendary. So I appreciate you guys. Thank you, Eric, for appreciating the Zooms. Thank you, Anthony, Sean, Nolan, my pops, Bree, everybody that's on here. I appreciate you guys dearly. Anthony, thank you guys. And I can't wait to do it again. Peace.
Appreciate you, bro.
Appreciate you, bro.